So everyone keeps asking the same question. Is this a buyer's market or is it a seller's market? And the honest answer, it's both. Some homes are in bidding wars and some homes are quietly negotiating. And both things are happening on the same streets, in the same neighborhoods, and sometimes in the same week. That feels like confusion, but it's just the market working normally again. The way to understand what's really happening isn't the headlines, it's in the data. I'm Jason Fox with John L. Scott and the Madrona Group, and every month I like to break down what's really going on in the Seattle housing market. No hype, no predictions, just the data and what it means for real decisions for you. And as always, the best place to start is the 3 key indicators. Every housing market comes down to these 3 things. 1, sales activity intensity. 2, monthly inventory level. And 3, the current interest rate. So first, sales activity intensity. Right now in Seattle, that number is about 36%. That means that more than 1 out of every 3 homes is going under contract within the first 30 days of it hitting the market. We call that a strong market. It's a healthy absorption rate. Buyers are active and they're selective. Sellers, they still have demand, but it's got to be earned. All right, second is monthly inventory levels. They're sitting around 2.6 months of supply. We consider that to be a low level. So anything below 2 months, sellers don't have to try. Anything above 5 months, buyers control everything. So 2 to 3 months means, decisions matter. And that's exactly where we are right now. Third is the current interest rate. Mortgage rates are holding at around 6.17% as of February 1st, according to Mortgage News Daily. That's not exciting, but it's stable. And stability matters more than people realize. We've also seen increased government focus on housing affordability, along with changes at the Federal Reserve aimed at bringing more predictability to rates over time. Does that mean rates are going to drop right now overnight? No, probably not. But it does bring hope. And more importantly, markets move on expectations first, and predictability, it restores the confidence, and confidence, well, that leads to transactions. Now let's look at what the market actually looks like with numbers, right? Okay, so across all property types, the average price of a home is about $906,000 in Seattle. Single family resale homes are right around $1 million, and condos are closer to about $640,000. Average days on market, they're sitting around 60 days. Single family resale inventory is tight at about 1.8 months. Condos closer to 3.9 months, and new construction higher at around 4.5 months. Homes are selling for about 98 to 99% of their list price. The list to sale price ratio matters because it tells us that sellers are getting close to what they're asking for, but they're doing it through correct pricing and negotiation, not just momentum, not just putting it on the market. All those numbers help to explain why the market feels a little uneven. It's not slowing evenly, it's segmented. And Seattle isn't just one market right now. It's segmented by price, property type, location, and condition. And price really matters. And the strongest part of the market right now is still the mid-price ranges, especially around that $750K to $1 million mark. And property types really matter. Single-family resale homes behave very differently than condos or new construction. And location, it always matters, but not just on its own. In a normal market, location sets the ceiling, but pricing, condition, and strategy decide the outcome. And condition matters big time. Light, layout, and finish quality will separate the winners from the stragglers. Buyers want move-in ready, updated finishes if they're going to be paying top dollar. That's why one home sells in a week and another sits for a couple of months. Same city, different rules. If you're a buyer right now, here's what you should be doing. First, know which lane you're in. If you're shopping in the competitive price ranges, preparation is going to matter more than price. That means clean offers, strong term, and being ready to move. And if you're shopping in the slower segments, your leverage is going to come from structure. Credits, rate buy downs, and closing costs can really help. And it means being fully underwritten. Fully underwritten means your lender has already verified your income assets, and credit. So when you make an offer, you're treated more like a cash buyer, and that's a good thing. In this market, readiness is leverage. And if you're a seller, here's what matters right now. The first 14 to 21 days, it's going to decide everything. Price and presentation matter more than ever. As I mentioned, condition really matters again. And especially for condos and new construction, concessions often work better than price cuts because buyers are shopping monthly payments, not just those big headline prices. Overpricing, it doesn't test the market anymore, it removes you from it. Now, let's talk time. February is the transition month. January was re-entry. February is commitment. The spring inventory is coming, but it's not here yet. There's still time to prepare your home and get it to the market before the big spring wave hits and before competition increases. Homes that launch cleanly before that wave, they often perform better than when you try to chase the market later. Here's the takeaway. This isn't a weak market, it's a disciplined one. Some homes, they're going to move fast, and some, they're going to need negotiating. And both outcomes make sense when you understand the data. All right, if you want the full breakdown, charts, stats, neighborhood details, all that stuff, the full report is linked below this video on YouTube. Thanks for watching, and I'll see you next month.